Right. Good morning. Happy Monday, everybody. Whew. All right, so we had the big OPEC Plus meeting happened over the weekend. Western journalists were notably disinvited to that meeting. So Bloomberg, Wall Street Journal, all the U.S. financial press, they were not welcome. Persona non grata at that meeting. And OPEC came out. OPEC Plus includes Russia and 9 other countries. They got it together and they decided we are going to cut oil production by 1.4 million barrels per day. Whoa, that's a big production cut. Not so fast. It's not really that big when you look at the meat and potatoes of this deal. And it ended up being a pretty lousy deal for the Saudis, an okay deal for the Russians, a great deal for the UAE. And really that 1.4 million barrel per day production cut, if you consider the fact that OPEC has been consistently missing their oil quotas by several 100,000 barrels per day, you can just right off the top cut off 400,000 barrels per day of that cut. Because what 400,000 barrels of that was several countries, including Russia, Nigeria, Angola, a few others, countries that have been missing their production quotas. They lowered their quota to what they're currently producing. So on the surface, it looks like they cut a lot of oil production for those countries, but realistically, not one single drop less of oil will be hitting the market from those countries. So right away, you can take that 1 million barrels or 1.4 million barrels right down to a million. And when you come down to it, what else do we see? With the Russians get to continue basically producing more than they're supposed to produce. Does that make sense? Because the Russians have been trying to finance a war of attrition in Ukraine. So everybody's just kind of pretending that Russia is abiding by the OPEC Plus agreements, but they're not. And I guess they're going to continue to play by those rules. The UAE is going to see 200,000 barrels per day. In addition, a 200,000 barrel per day increase for the United Arab Emirates. And the entirety of this production cut, all 1 million barrels, will be coming from Saudi Arabia. They are going to go it alone. They really want this production cut. So what's the net result here is OPEC Plus is reducing production. It's not really going to be enough to drive significantly higher oil prices. It's really just them getting out in front of a decline in global oil demand caused by the mother of all recessions that's on the horizon here. And the Saudis are going to take this one on the chin. The oil markets initially, big move up in prices last night, about $5 a barrel for West Texas Intermediate. And that spike immediately reversed, came way back down. Right now it's settled to about halfway to where it originally spiked from. So oil markets are really shrugging this one off. Oil prices are up about $1.50 this morning. But considering a 1.4 million barrel per day announcement, which is really just a 1 million barrel per day cut, you'd think prices would be much higher. The oil market really doesn't care about this production cut because the oil market knows what you know and what I know, that the global economy is slowing. And you don't need that much oil if the economy is slowing down. So really, this is just going to be enough to maintain prices in this low 70s to low 80s range that it's been trading in. I was talking to my moderator, Mish, this morning, and we know the Saudis want $80 a barrel oil, but I think this cut is really more about putting a $70 floor on oil, keep it out of those high 60s where it's dipped a couple of times recently, more so than about getting oil up to $80 a barrel. We'll see if we get there. My gut tells me no. Oh, and meanwhile, U.S. oil rigs continue to shut down. That's something that's been going on for several weeks. We talked about it on my live stream Friday afternoon. The U.S. just keeps shutting down oil rigs. As older rigs age out, new ones are not coming online to replace them. So domestic production is falling while this is all happening as well. And with that, we are going to shrink my big melon of a head, and let's see what's going on in markets this morning. The S&P is up an entire 5 points, or 0.13%, at 4287, still above that important 4200 technical level. The Dow is down 12 points, or 0.04%, at 33,749. And the NASDAQ is up about 0.2%, or 25 points, at 13,262. So stocks aren't really moving very much this morning. And when you think about it, the debt ceiling, my God, thank God it's behind us. That's over. What are we left with now? Where do markets get their direction? Keep your eye on those treasury auctions. Now that the debt ceiling has been raised or suspended indefinitely, whatever they did, Janet Yellen is free to go to the bond market and borrow money to refill the Treasury General account. That starts today. And I think they're already starting to sniff that out in the DXY. The dollar is up 28 basis points this morning, climbed back about half of its losses from Friday when it took a breather, currently at 104.29. And looking over in the bond market right now, we have got bonds are pretty muted reaction today. The 1 month is yielding 5.22. Now that the debt ceiling is raised, the 1 month is not really going to be that big of a deal. The 10-year is at 3.75, up 7 basis points this morning. But the big deal in the bond market this morning is this story here. The U.S. Treasury Department plans to sell $123 billion of T-bills today. They're saying right on the X date, but there's a catch. Now, this was written before the deal was signed, but here is the important thing. I want to zoom in right here, is that, where'd it go? Oh, I lost. Here we go. The Treasury plans to sell $65 billion of 3-month T-bills and $58 billion of 6-month T-bills today. So there's going to be a lot of liquidity sucked out of the bond market. Watch the yields on the 3 and the 6 month for their reaction to that. That auction takes place, I believe, 11:30 Eastern time this morning. Over in the commodity space, we've got gold is down 875 at 1,960, down about 0.5%. Silver is down 28 cents this morning, or about 1.17% at 23.46. Precious metals doing kind of what you'd expect them to do during higher yields and a stronger dollar. And here we go. Crude oil up $1.56 or 2% this morning, almost 2.2%. Now, any given day, that would be a pretty good move in oil. But if you consider that this is coming about 12 hours after a 1.4 million barrel per day production cut announcement, you'd think there'd be a bigger move, but there isn't. And here's the story in Bloomberg. Saudis take the big hit in the solo push to revive the market. The UAE emerges as a winner with higher output next year, while Russia is spared the burden of fresh cuts. There was one big winner among the OPEC group from Sunday's gathering of oil ministers in Vienna, the United Arab Emirates, but the group's de facto leader, Saudi Arabia, was once again left shouldering the burden of immediate output reductions all on its own. In what was undeniably a long overdue move, the group's underachievers were pressured and cajoled into accepting a redistribution of future supply targets to bring them into closer alignment with their real ability to pump oil out of the ground. That paragraph is just saying, yeah, these countries that have been consistently missing their quota, we're lowering their quota. So it's not going to result in less oil for them. It just means we're lowering their quota to what they can actually produce. So a lot of this production cut was really just smoke and mirrors. 4 of OPEC's West African members eventually accepted lower assessments of their production capabilities. Only Gabon was spared, which will form their supply target for 2024. Half of the group's non-OPEC members, including Russia, will also have their levels lowered for next year. The challenge allowed OPEC Plus to claim it was cutting targets by 1.4 million barrels per day in January, but the truth is rather different. None of those revisions will affect a single barrel of actual production. All they will do is bring them closer to the actual output levels of the countries concerned. The only real change for the next year will come for the United Arab Emirates, which will be able to raise production by 200,000 barrels per day. It will readily use that right, having long argued that it was making deeper cuts against its capacity than other members. Russia will lose parity with Saudi Arabia that it has enjoyed since the output reductions of 2020, when the targets of the two nations began to move in lockstep. The country was struggling to pump all it was permitted even before its troops invaded Ukraine, but it gained 2 big victories in the short term. The first was the acceptance repeated by the ministers of both Saudi Arabia and the UAE that Moscow is implementing its promised curbs, despite a lack of evidence from the international flows of its oil. So really, these are some previously announced production cuts that Russia said they were going to make. There's really no proof that they're doing that because the Russians really need to pump more oil because they have to pay for the war in Ukraine. Second, and perhaps more important, is that it wasn't asked to share any of the burden of the further immediate output cuts. Russia is not cutting any additional oil. In that sense, Saudi Arabia was the big loser from the gathering, having expended its time and energy on tidying up future targets. It was left on its own to make the additional curbs now. So all 1 million barrels of the net reduction in oil is going to be coming from Saudi Arabia. So the Saudis really want these higher prices. But they're not getting them, folks. Take a look at oil markets this morning. Now, this is last night here. Let's zoom in a little bit. Here was the big announcement when they announced that 1.4 million cut. You can see oil gaps right up. goes as high as almost $75 a barrel for West Texas Intermediate. And then immediately, within seconds, reversed course and started selling off. Came back down almost to where it started. Now we've settled a little bit higher, but even right now, since markets open, oil is trending lower. Currently trading for West Texas Intermediate about $73, up about $1.20 from where we started at. Considering 1 million barrels per day just came off the market, this is, again, yawn is the only way I can describe the market's reaction to this production cut. The oil market doesn't really care. Now, what does that tell you about the state of the global economy, where 1 million barrels per day of oil can be yanked off the market and oil prices don't really react to that? That means the market is saying there is less oil demand on the horizon to offset that reduction in supply, and so price isn't really moving. That tells you this big recession is coming if it's not here already. My personal opinion, we've been in a recession since the beginning of last year, but the numbers are juiced to make it look like we're not. Oh, and while we're on the subject of oil consumption and transportation and industry and economic slowdown, let's throw this one on there. U.S. West Coast port disruption stretches into its 4th day. This story is quietly developing, not making a lot of headlines right now, but this is one to watch. This is dated just this morning. A wave of industrial action across U.S. West Coast ports has entered its 4th day as contract talks between employers and staff stall. The Pacific Maritime Association, the owners, which operates the West Coast terminal operators, said Friday that dock workers were staging concerted and disruptive work actions. They're not calling it a strike, it's a slowdown. And that had stopped or severely disrupted operations stretching from terminals at Southern California's big container port complex at Los Angeles and Long Beach to Seattle, with Oakland suffering the largest disruptions. The industrial actions carried on over the weekend and is ongoing today. The ILWU International President Willie Adams, in a statement, said the talks are ongoing. The latest work actions come as labor talks between the PMA and the International Longshore and Warehouse Union stretch into their 13th month. We aren't going to settle for an economic package that doesn't recognize the heroic efforts and personal sacrifices of the ILW workforce that lifted the shipping industry to record profits when cargo surged during the early days of the pandemic. So this is the dock workers saying, hey, we worked our butts off. Remember the shortages? Remember the backup at ports? Remember the parking lot on the West Coast? Well, this is the workers saying, hey, how about a little something for the effort? Give us a little bit of the money here. And it looks like their timing is really good here because the shippers' decision to shift to the East Coast has been thrown a curveball. Remember, during the West Coast backup in the ports back in 2021, a lot of shippers decided to start going through the Panama Canal to the East Coast where there wasn't that big of a backlog. Of course, that eventually caused a big backlog on the East Coast. Well, there's a problem in the Panama Canal. It's another story that is sneaking up on everybody. The Panama Canal, where severe drought and the likely onset of the El Nino weather phenomenon is seeing a series of draft restrictions being introduced. The water levels in the Panama Canal, they're struggling to maintain them. So some of those bigger ships that need more depth may not be able to traverse the Panama Canal for much longer. So those West Coast dock workers are seizing on the opportunity to try to get some better pay for themselves. So that's a story to keep an eye on. They're not using the word strike yet, but they are saying it's a slowdown. And combine that with this Panama Canal story, there could be a problem at ports brewing right now. Keep your eye on that one. And real quick on the Fed watch this morning, because we are now a week and a day removed from the next Fed rate hike decision. Right now, interest rate futures are saying 76% chance the Fed does nothing, i.e. the pause is on the way. And that's all I got for you guys this morning. I want to say thank you very much, everybody, for watching. Thank you to my Patreon supporters for everything you do for the channel. Link down below should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. Till next time, live small and dream big.